Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hello, everybody. Welcome back to another live stream here on the A1 Trading Show. I'm joined by, he's back, he's on the show, Mr. James. What's going on, James? How are you?
Hey, what's going on? How you doing today?
I am good, and you've got the new room set up, which looks really cool. We've got
we've got let's see, you know what, I'm just going to pick the webcam up and kind of show off a little bit with what we're working with here. It's the same room that we had that we would do it from, but we've reorganized a little bit. We've pushed this table more against the wall. We've given ourselves a little more space. We have a monitor in here now, so we're definitely making upgrades, definitely making improvements in here. Yeah, it's cozy in here. I like it.
Yeah, it's cool. I've been noticing Frank go in there and just work by himself, and they're just enjoying this.
If you want to talk to Frank, you need to make an appointment now, because
I've heard. That's what I've heard.
He has office hours that you have to adhere to.
Yes, exactly. So James, what are we looking at today? We've got some news on the horizon. What's in focus?
Yeah, so not a whole lot happening today, at least not yet so far. We did have the Bank of England's Governor Andrew Bailey spoke early this morning over here on the East Coast. And later on today, we do have Australian unemployment rate. So that'll be interesting to see. That's happening at 9:30 p.m. Eastern time. And a little look ahead into tomorrow, we do have U.S. unemployment claims at 8:30 a.m. That means that we will be starting our stream a little earlier than normal. So don't forget, tomorrow, if you want to come hang out with us, watch a stream, get updates on all of the latest news, those unemployment claims, that will be happening earlier around 8:15 a.m. tomorrow morning. And then the other thing happening tomorrow is the Bank of Canada's governor, Tiff Macklem, is going to speak as well. That'll be at 11 a.m. And a look ahead on Friday, not a whole lot going on, except big Jerome Powell himself is going to be speaking as well. So we've had a lot of bank leaders, if you will, speaking this week, between Bank of England, Bank of Canada, and of course the Federal Reserve with Jerome Powell. So that'll be an interesting one on Friday for sure. That is happening at 11 a.m. as well.
Yeah, should definitely be an interesting time. Of course, this week we had retail sales numbers, which shook the market a little bit. Yesterday, we were streaming for that, of course. And now here today, like James said, we've got that Aussie unemployment rate. Should be something of potential interest here, especially if you trade Aussie pairs. And again, we continue to focus very heavily on jobs numbers here in the United States, as of course, that's one of the key things that the Federal Reserve talks about. We talk about this often, but the Fed pays attention to inflation and it pays attention to jobs at the forefront of their mission, self-proclaimed, right? Their goal is to try and keep jobs at a healthy rate, but also keep prices from going up too rapidly. So yeah, good stuff there, James. Thank you for joining us as always for the news, and maybe we'll catch you back a little bit later on. See ya.
Yep. Thank you.
Cool. So yes, in terms of market volatility here today, guys, the Aussie pairs could be, of course, impacted by the unemployment numbers. That's certainly going to be something that the RBA, the Royal Bank of Australia, will be paying attention to. But we'll keep that on the back burner because it's still a ways away. What I want to talk about here is the metals market here this morning. Gold continues to push lower, and we had a ton of posts yesterday all about how I was wrong about gold here. And, hey, I've been doing this a long time. There are times when you're right. There's times when you're wrong. I was wrong on gold. Price continues to push lower here off of this level of support here. 2010 was a level I thought would hold. It did hold for a little while. It just didn't do what I thought it would. I was long both here and here. I took two different buy attempts. The first one, I made some money on this run up. I trailed for a profit, but then I re-entered my trade around 2010 and did not see the same outcome. We saw a price roll over and break through the lows. I stopped out yesterday, shortly after putting together a video about my trading ideas. So it happens, and we're going forward here. Where are we at? Well, first of all, I'm feeling grateful that I took a stop loss here instead of trying to hold on further, because again, we're looking at a daily chart. This is a bigger term move to the downside that we're seeing, and I stopped out at what I would think is an appropriate point to stop out. Right, I stopped out when the price did not do what I thought it would do, and it feels good, I will say, when you control risk and you see that you made the right decision, even if it was it's not fun to get stopped out for anybody, right? The idea is that if you stop out, sometimes it can very seriously protect your account from further losses that you may have incurred otherwise. So that's what I'm looking at in terms of gold. I'm feeling good about my decision to stop out of that. And the question will be, is it time to buy gold again? And my opinion right now is no. So, I had a game plan here, and I plan to stick to my game plan. Now, I'm not shorting gold. I'm not short biased on gold either. I am actually bullish on gold, but I don't think conditions are ready yet. And I'm going to discuss why in just a moment. We're going to talk about the dollar. But this breakout here should have, in my view, been the move that I was looking for. Right. And because it wasn't, because we saw rejection, we saw lower highs, we saw lower lows, and we broke support, that is not my game plan didn't work out. So when my game plan doesn't work out, what do? Well, I move on and I wait for a setup to arise that makes sense again. Now, you could make the argument, hey, maybe there's a big support level here around 1975, so on and so forth. And perhaps I'll watch to see how price reacts from this. But again, we broke a level of support I think should have held for the bulls if it was going to go bullish from here. So again, we have to even mark this level at what was support. Sad to see it go, but it has to turn red now, right? This is now a key level of resistance. So for me, what am I looking for before I get long gold again? Well, I'll tell you, I still like the fundamental factors. I'm still bullish fundamentally. However, what I'd like to see technically is a break back the other way. Now, is that the likely scenario right now? I don't think so, right? I don't necessarily think that gold is likely to do that. And that's why I'm not buying the gold market here when it's selling into this selling off right now. So what does it need to do? Well, it needs to prove that it can, in fact, go bullish by breaking out to the opposite effect. Right now, it proved that it wants to go bearish. It proved that sellers were strong enough to break a key level of support, right? So even though I am fundamentally bullish on gold, guys, I am still just going to wait to see what happens if we can get a break back the other direction. Hopefully that makes sense. And yeah, just trying to stay transparent. I took a loss yesterday on gold. It was a very small loss on the account. At the end of the day, when I take trades, I'm not throwing my whole account at something that is foolish, that is gambling. We are trading with very small size relative to the account that I'm trading. So that's a key thing. And look at that, gold now trading at 1982. A big thing for me too is the psychological level was broken for gold, and that's kind of a key thing. Now you could get fancy with it, and you could say, well, if I draw this trend line here, maybe wait for a break to the upside here if you're bullish, right? Or if you're bearish, just look at a sell into these retests. That's another thing. For me, I'm not bearish. I'm bullish on gold. I'm looking for a breakout of a key zone like this in order to look for more evidence of bullish setups. But right now, we're just not seeing it, and I'm just not there on the gold bull side. Trust me, I love being long on gold. It's one of my more preferred trades, is buying gold runs to the upside. But when it's not happening, it's not happening, and I have to go into hibernation until it does. Let's move on and talk a little bit. Let's talk a little bit about this dollar move. So the dollar, we're going to pull up the 4-hour chart. More impressive than I thought it would be. And I want to show you guys a tweet really quick that I put out on this. I was pretty proud of this. I'll be honest with you. Actually, you know what? It's in our Discord channel, and let's do this really quick. Let's drop the free link to the free Discord if we can, Chandler or James, either one of you guys, if you guys don't mind doing that. I shared this in the free Discord this morning. We do some cool stuff in the free Discord. If you guys are not in the free Discord, what are you doing? Get in there. Here it is. Free Discord, no strings attached. You just enter your email and then we'll send you the link. We do this as a precaution to avoid spammers and scammers from joining our Discord at a rapid pace. So if you'd like to join us, click this link, fill it out. Let us know that you'd like to join the Discord by doing that, and it will take you directly to the link where you can see what's going on. So here's where I'm at with the dollar. Oh, did I not post this on the dollar? Dang, I'm messing up. So whenever I do these analysis, I have like this process. It's like a 20-minute process of going through and posting things to every social media. It is so tedious. And they have things like Hootsuite stuff that allow you to post to many places at once, but you can't do all the formatting that you want to do. So it's very frustrating. Anyways, this was my dollar analysis. And if you guys don't follow me on Twitter, make sure to do that. That's also free to do, in case you didn't realize that. It's free to follow me on Twitter. But if you guys do want to follow me on Twitter, I do have a handle at TraderNickFX. We have a lot of fun over there. We get into political rants like crazy. I'm just kidding. We don't do that. My promise to you is if you follow me on Twitter, I won't talk about anything super political like that. It's not what I'm here for. But speaking of political stuff, that about the most political we'll get is talking about something like this, the current debt ceiling concerns for traders paying attention to the markets, especially the dollar. The dollar's trading higher off of some of that fear surrounding the situation with the U.S. government in regards to the debt ceiling. Now, the debt ceiling, I believe, and don't quote me, I believe I read this right, has been raised 78 times in history in the United States. 78 times. It's likely to get raised a 79th time. But the point of me saying that is that the reason markets are still fearful is that when it comes time, push to shove, there's sort of two camps on this debate, right? There's one side of the aisle who says, hey, let's raise the rates. And there's another, raise the ceiling, the debt ceiling. And the other side of the aisle says, we'll do that, but only if we make some, debt cuts so that we don't just spend endlessly. And the two go to war on this. And eventually what tends to happen is the debt ceiling gets raised. And this is why long-term, you don't want to hold cash because they print more and more of it. But anyways, the point here is that right now that fear is causing the dollar to drive higher. Now, is this a short-term move or is this a lasting move? In my opinion, this is a short-term move. With that said, however, it's a short move that could go a lot further than I'm expecting, and hence why I am being very cautious to short the dollar at this time. Price action is very bullish, right? Yeah. Free Discord is full of VIP Discord ads. Jack Ripper, yes, you are correct. And Chandler has a great point here. He's the producer behind this. In order for us to put on this show, this is how capitalism works. Capitalism works. It makes a free service available to everyone because there are services and stuff that surround it to make it possible. Nothing in this world is free, not even our streams. And that is why we are thankful to our sponsors and dedicated to you, my friend, Jack the Ripper. We're going to run a quick commercial break. Speaking of one of our sponsors, check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Nice, literally dedicated to me, says Jack the Ripper. Yeah, Jack. I mean, I understand. I'm not trying to come at you too hard. It is just the truth. I mean, for us to do these shows, we have studio office, cameras, lighting, all that sort of stuff. And we thankfully have amazing sponsors that help us monetarily support these projects. Thank you to ACAP. And yes, we do have some awesome offers for you guys. I believe we should drop a link in the chat for that with the mention of the ACAP thing, if you guys wouldn't mind doing that, so that people can send a message in if they do want more information about the ACAP partnership. That would be awesome. You can get a free edge finder with that. So yes, coming back to this dollar idea, price breaking out to the upside, pulling back. Technical analysis here just does not look suitable to selling, in my personal opinion, right? So I'm not looking to sell this. In fact, when I look at this chart, it looks really, really strong, right? So until that strength breaks to the opposite effect, if we start seeing an inverse effect, we start seeing pullbacks down and then they break into downward structure, that's a different case scenario. But right now, it seems that the dollar is too strong, and I'm not looking to sell something like this. Now, am I looking to buy? Not necessarily either, because again, I mentioned I am thinking that this move, the debt ceiling move, could be a short-term upside for the dollar. And then I think that longer term, it will continue to go back to what we've talked about for a while now, the inflation story continuing to push things lower. James and Chandler, I think we talked about this a little bit. Sorry for the confusion. We're sending people now to the live chat in case they would like to sign up with ACAP. We're just going to insert the support reps to help people with their setup. So instead of sending the direct link to that, that's perfect. You got it. So we're just going to send direct messages. If you guys would like that free Edge Finder deal with ACAP, you can ask one of our support reps about that. So so you have inflation data here in front of us. And what I think could be a drag on the dollar going forward is this inflation story. So if we're looking at the US dollar here specifically, what we've noticed, and we've talked about this for a while, is that July of 2022, we saw a peak in inflation headline numbers in the United States. This was at one point was almost at 10%. We were at 9% inflation in the United States. Well, since then we've been on the decline, and the longer that this decline persists, I think it's going to pull the dollar down for a while. And now with this rally, I think that this rally is not necessarily a launch back to the highs. And I think that we have room to see that dollar, once this story about the debt ceiling sort of passes, I think, and this is again, not financial advice, it's my opinion, I think that it could drag the dollar lower at a point. But for now, I'm not choosing to, from a technical analysis perspective, I'm not going to be selling the dollar when it is trending so strongly. I'm going to wait for that to crack. Ideally, what that would look like would be something like this, like a break to the downside, things like that, right? So yeah, no problem, Chandler. It's all good. We have a lot of different instructions floating around. It's complicated stuff here. Let's see, what else are we going to do? So we talked about the dollar. We talked about gold. Let's talk about some other things here. I want to talk about this NASDAQ move. The NASDAQ continues to be really resilient in terms of it just keeps finding higher lows. It's a really impressive move here for the NASDAQ. And, the question is this just going to keep launching higher? The NASDAQ is one that, in terms of smart money tracker stuff, I want to show you guys this stuff. So we're looking at the smart money tracker. This shows us the positioning of institutional professional level traders, where they're at. These are hedge funds, etc. Right now, gold is still long biased. The dollar's still long biased. But interestingly enough, the NASDAQ has a slight preference to the long side at about 58% long, 42% short. Very interesting to see that on the list. Now, of course, we have to acknowledge that on the other end of the spectrum, you have the S&P 500 at 74% short. So that index is quite short biased by institutional traders, but it's a notable divergence between the two, where the NASDAQ actually has a preference to the long side. So that's something, if I was to trade one of the indexes right now, it would be the NASDAQ. That's just my personal preference. I don't have a trade open on it. in the short term. I'm looking for opportunities to potentially get involved, but I also don't want to chase. I don't want to, I think that you have this dollar strength could put pressure on the Nasdaq. We'll see how that goes going forward. Speaking of the Edge Finder, let's also take a look at the watch list here for a second. And if we go to this watch list, we've got a couple things to discuss. So gold is still on here. It is shrunk in its score from a 7 to a 3. Now, it's been floating between 5 and 7. I would say 4 and 7 for the last, I would say maybe 2 months or so. It's been very bullish overall. This is the lowest score I've seen it on for a while. And part of the reason for this, I would imagine, is that, let's see if I'm correct about this, but I would imagine retail traders, so retail traders are now piling into longs on the gold market, which is a bit concerning, right? So if we have the gold market, retail traders are very long on gold. We can see this again. The retail sentiment is a contrarian indicator. It gives us a positive score when retail traders are short. It gives us a negative score when retail traders are very long. That's how the algorithm within the Edge Finder calculates and computes that. We also have seasonal trends to the upside. So there's still some evidence of potential bullishness, but I just don't like the price action on gold. Now, I also want to talk about this pound yen move. This, however, is probably one of the most pressing ideas that I have right now. And look at this. I did this whole write-up on my Twitter yesterday. And I'm going to keep my analysis up because I worked really hard on this, but Twitter, I feel like I was an artist putting this together. Like TradingView just has so many cool, like different effects and animations and things you can draw on there. It's really quite the platform. What I'm looking at here is GBP JPY. We're looking at a 4-hour chart. And what I've noticed here is that in this area, 170.8, we saw a ton of resistance here, right? Shot to the downside. But now we're trading above this. We're getting above previous highs. And we even closed above that. So in my opinion, there may be room on the lower time frames to see an expansion here on this GBP JPY idea. So let's narrow in on this. Let's talk a little bit closer about the pound against the Japanese yen. So the pound against the yen, the Bank of England is relatively hawkish. Inflation's still very high for the UK. We're in double-digit inflation still, 10 point something percent, right? So we have a very high level of inflation in the UK. So if the UK has very high level inflation, what do they have to do about it? The Bank of England has to raise rates and stay relatively hawkish until they see that inflation erode away. Until that happens, that's very counter what the Bank of Japan is doing, which is a very dovish approach. They're not looking to raise rates. They're trying to get their inflation to an even higher rate. So there's a divergence here that I think creates a demand for the pound and a throwaway for the yen, in my personal opinion, right? So I am looking at this and I'm saying, well, pullbacks could actually be opportunities, in my view, to go long pound Japanese yen. Now, of course, not financial advice. This is a trade setup I'm looking at. I'm not here to tell you what to do with your trading account. As always, that's not what we do on these shows. If this is a show for people who are serious and trying to learn trading, gain some insights on what's going on, and be a part of the community. But if that's you, then you're in the right spot. So yes, pound yen pullbacks into support could be kind of interesting. I think that if we narrow down into the lower time frames, right, this idea here, I would have liked this thing to break just a bit higher, but I'm honestly, I'm fine with this idea. If we pull back into about right around here, right, that actually looks like a potential break and retest entry for my trading that I would be probably interested in taking a stab at. So this is a trade that I am watching for myself today, pound Japanese yen on the long side. And I want to talk just briefly about the Edge Finder scoring of the pound yen. We do get a +3. COT data points towards bullishness here on the pound against the Japanese yen. Let's pull up the pound against the Japanese yen specific chart. So we have charts for everything on the Edge Finder, so you can see the full breakdowns. So here's where we're at. Pound yen +3 overall, score in the COT department, we have GBP about 50-50, so nothing really preferred there. However, the Japanese yen continues to be one of the most shorted assets on the list. Flip that around, the retail sentiment, the crowd is shorting this pair. And we know that if the crowd is shorting a pair, the way the Edge Finder scores this is it gives it a +1 if the retail crowd is very short. It gives it a -1 if the retail crowd is very long. So right now we're getting a +1 in the retail sentiment category for that. Yes, we have a little bit of a surprise here, guys. I'm going to tell you about that in just a second. We're going to be doing something pretty cool. Stick around. Don't go anywhere. I'm about to announce that. Seasonality also positive for the month of May. We historically see during the month of May, we see a positive drift, it seems, in the last 10 years on the pound yen. That's not future guarantees. It's just what we historically see month by month. We can observe that using the seasonal trends indicator on the Edge Finder. The trend is to the upside. We have a projection chart here. GDP, inflation, unemployment favor Japan, whereas interest rates are definitely higher and more attractive for foreign investment for the UK. So there you go. That's how we break it down. So now we've combined here several confluence factors, a technical chart, but on top of that, we've also looked at some economic numbers. We've looked at sentiment. We've looked at the commitment of traders data. We've aligned several things to build up a trade idea here on pound yen. That's how I'm using the Edge Finder in my day-to-day trading. If you guys would like, here's the surprise that we have for you guys. If you guys want a free Edge Finder, we're doing something right now. Let me show you this. So I'm going to pull this up. We are giving away free Edge Finders today. And I'm not even kidding. We are literally giving away 2 free Edge Finders today. It's not a long-term giveaway. We're going to give it away literally tomorrow morning by stream. We'll be giving away 2 Edge Finders. If you want a chance to win an Edge Finder, totally free, no strings attached, here's how you can do it. All you have to do is message us in on our website and let us know what your favorite feature of the Edge Finder is. So click this link. We're dropping it in the chat right now. Click this link. And right here, when you click this, message us and let us know your favorite feature of the Edge Finder. If you do this, you're entered into the giveaway for a chance to win an Edge Finder totally free. We're giving away copies to some of the viewers here today. So if you guys want access to our software, we're a software company in Atlanta, Georgia. We build tools for traders. And if you want access to these tools for free for yourself, all you have to do to get them is click this link, message us your favorite feature about the Edge Finder, and we'll be announcing a winner tomorrow. Also, while you're there, they might let you check it out for yourself, tour around the Edge Finder, get yourself acquainted with it. And hey, you might be the lucky winner or one of the 2 winners since we're giving away 2 copies. Message us in right now, blow it up. Again, we're only doing it for 1 day, so you'll know by tomorrow morning who won this giveaway for a chance to win the Edge Finder. There you go. And cool, lots of you guys are jumping into the giveaway, so that's great to see. Does the debt ceiling decision affect stocks and indices? So good question, Sistikello. I will say this. What impacts the currency market impacts all markets. All markets impact each other to some degree or another. This is why a lot of times people say, well, I only trade currencies or I only trade bonds or I only trade indices. The reality is they do have their own sort of specific personalities, but they all react a certain way. So think about this. If you're thinking about your family, if something catastrophic happens in your family, like, I don't know, something bad happens. Someone breaks a plate in the kitchen. Everyone is impacted by that plate breaking in the kitchen, but everyone reacts differently in your family. Some people might shout, other people might, grab for a baseball bat, right? It just depends who the person is. This is the relationship that the markets have. The plate drops, that being maybe the Federal Reserve makes a big point or something like that, and the whole market reacts. But different things have their certain behavioral ways of reacting. This is why people choose to sort of specialize. But at the end of the day, what affects one market affects all markets. The Federal Reserve is not something unique to currencies. It is unique to all markets, right? Financial markets as a whole react to big events. Hopefully that analogy was was well received and made sense to you guys. If it didn't, then my wife loves to tell me when my analogies suck, and I make a lot of analogies. So when they're bad, don't tell me they suck, because I already get that enough. I'm just kidding. She will tell me they're bad even when she knows they're good, just to mess with me. So it is what it is. Let's keep going. Let's talk about some more charts here. Let's see what else we've got. I want to take a quick look at silver. Silver taking a beating, guys. Silver was trading at $26 an ounce, now down 10%. Down to 23.6. This is a big sell-off. And why I mention this is that the commodities market is really interesting. The commodities market tends to do very well when there's a strong demand for commodities, which typically lies in strengthening economies, right? If the whole world is growing and expanding, it tends to cause movement to the upside. For things like oil, causes demand for gold and silver and copper and things like that. So yeah. Didn't know that the girlfriend is now a wife. Congratulations. Thanks, Andy. Yes. She has been she's been upgraded. I as well. I went from boyfriend to fiance to husband. So it's good news. Yes. Yeah. So oil is an interesting one. Quick look at the euro. The euro has been selling off like crazy here. So take a look at this, right? The euro just getting beat down. Once it fell out of support here, it just seems like it cannot catch a bid. The euro now trading at 1.0816. It was just above the 1.10 mark, now trading back down very quickly. It seems like momentum favors the sellers here. This dollar strength off of the debt ceiling fears tends to or continues to drive the euro lower. So certainly an interesting chart. I would say I'm not necessarily trading this one, but from just a pure price action standpoint, this is a very bearish chart for the time being. We'll see if that changes. Again, sometimes, you get those big rotations and they can be the biggest, kind of trades when people catch counter trend trades. But for me, I'm a trend trader until something like this turns around. I probably wouldn't want any part of it. But I'm also not really bullish or bearish the euro. I've mentioned this earlier, that if you take a look at the euro and the dollar on the smart money tracker, right? The COT data does not favor one over the other too much. The euro and the dollar are both heavily bought by institutional traders, and we can actually compare this even closer. I'll show you guys this. So USD, and we'll go euro on here. And so when we compare the two, what you can see is that you've got the dollar, you've got the euro. Both of them, institutional money seems to be very piled into long. So I don't really want to trade one against the other. What I'd prefer to usually trade is one that's very bought by institutional trader and one that's very sold. An example of this right now would be something like euro JPY or dollar JPY. So if we compared the dollar and we take off euro, let's go JPY, look at the divergence here, right? Institutional money is short Japanese yen and long US dollar. That's a clear divergence, and that I can build a trade plan around as long as I have all the other confluence factors that I look for. This is, again, why we use software. And remember, guys, we are giving away a free 2 copies of the Edge Finder right now, and do not miss your chance to join that. Again, we announced it earlier. If you just joined, click this link that's being dropped in the chat. We're giving away 2 free Edge Finders to some of you guys in the chat here today. So click that link that's being dropped in the live chat right now and let us know your favorite feature of the Edge Finder. And we're going to be giving away 2 copies tomorrow morning. So there you go. Now, guys, we're going to introduce, in case you haven't met him, or bring him back for the first time in a little while. We're bringing back Gary, aka FX. Hey, Gary, how's it going?
It's going well, man. Nick, we had a fantastic time. We traveled for 2.5 weeks out in South Africa. We drank a lot of drank a lot of wine, ate a lot of food, and just saw the great scenic places like Pinnacle Point, which is a golf course. We played golf there, dude. It's on the mountain. You're playing off the cliffs. It's just an awesome time we had, man.
That is so cool. I that's a trip I'm jealous of. We actually My someone, a distant relative, family friend, was telling us about their trip to South Africa this past weekend, and it sounded just like the coolest place ever. So I cannot wait to someday hopefully visit. I hear
Yeah.
it's very beautiful. Were the sunsets really nice? I've heard the sunsets are beautiful there.
Yes, it is. You definitely want to do the Cape sort of trails and go from like George all the way to Cape Town. They call it the Garden Route, which is if you enjoy wine, it's a great place to go ahead and do some wine trips as well.
Yeah, that's so cool. Well, Gary, welcome back to the show. If you guys do not know Gary already, Gary has been coming on the A1 Trading Show for well over a year now. He's been a special guest, going through charts, going through what's going on. Gary, what are you looking at now that you're fresh back from your traveling? What are you watching on the charts?
Well, I think you're right on the money there. I think we're definitely seeing a swing of sentiment on risk on, risk off. And just as you mentioned about the euro US dollar, we've certainly seen a lot of weakness coming out in the dollar. Now, we expect the dollar to get weaker, much weaker than what it is right now. But in the short term, yes, absolutely. We're definitely seeing some momentum in the bearish move on the euro, breaking through that support level that I think is pretty key, around about that 1.0855 level. And so my focus is JPY weakness, dollar weakness, also looking at slight euro weakness, and then also looking at Swiss weakness as well, which is pretty much what I need because I'm long on CAD Swiss as well as Euro Swiss. So this is pretty good for me.
You know, Gary, you might like this. I've got a long position on Euro Swiss franc, and part of the reason for that is it's not purely based on technicals. It's actually just before you stepped on, I was talking a little bit about the COT data, and to your Euro Swiss idea, I have a very small position, and believe it or not, I have a dollar cost approach that I'm using, which you might love. You know, I know it's a little different than usual, but I'm actually long Euro Swiss as well. And one thing I want to point out about that currency pair that I found kind of interesting is that the euro has a very high demand in terms of COT data. What we're looking at, this is the net positioning. For those of you guys in the audience who are not familiar with the COT report, this is the net positioning of hedge funds, speculators, large speculators in the market that have to report to the CFTC. We have that data here, and what we're seeing is that the euro is sort of a favorite. At this point, let's see what the percentage is. It's a 76% long ratio relative to the Swiss franc, which at the Swiss franc level, we have the opposite. We have 62% short ratio. So a lot of shorts on the Swiss franc, a lot of longs on the euro here. So when picking a currency pair, I was looking at this one specifically. So I'd love to get your take on Euro Swiss franc. You've got your chart pulled up. That would be awesome to see what you think there in terms of technical breakdowns.
Yes. So I agree with you that you've got that sort of scale on the buyers and sellers for the different currencies. And certainly we've seen that in the technicals. Your data reports exactly what I'm seeing in the technicals, because right now, and that's actually pretty cool that you've got that, because that really helps traders that don't really have a sort of a good idea on their technical side to be able to have that extra support in the sense of looking at your data and then using that data to be able to define which direction to trade. And if you take that data and you look at the chart right here, we can see that we're at this key level of support here on this daily time frame. Key level of support. We've got a falling wedge taking place right here at that support level, and now we're getting that little bounce. We've got an oversold condition right here. So everything's moving or at least lining up for upside move. I think we're even got some slight bit of bullish divergence here as well, also indicating a rally. Now, we're definitely not out of the woods. I'm long on Euro Swiss, but it's certainly not at a place where I'm excited about until we break through this downward trend line. Once we break through the downward trend line, we know that the price normally chases after the top of that falling wedge, which is right up top here. So once we get a clean break over here of this downward trend line, and we see a nice clean break of this wedge, we know that there is a lot more upside potential on this particular setup. And that would be a good place to start looking to add on to that position. So adding on to a winning position, which means that the market goes up, any dips, you're going to go ahead and want to get in on those dips as the market continues to rally up towards this target up here at the top. So I like the setup. I like the way it's all pointing in one direction, and I think the data is also showing the same sort of direction as well, which is great.
Yeah, it is. The COT definitely adds a nice little level of confluence there. But I was just about to ask you in terms of targets, where you see the Euro Swiss going if we do in fact catch a rally off that longer term support. As you mentioned, off of the daily chart, we've got that big strong support long term at 97.30. Let's call it just about that area. That seems to be an interesting sort of decision point for the Euro Swiss. And if it does rotate, to your point there, buying pullbacks, rips, it has a lot of room to expand higher if that support level does decide to hold, if we start to see a pivot, and perhaps that commitment of traders data, if institutional money ends up being right on the money on that one, it has a lot of room to expand higher.
Yep. And also, if you take a look at the Fibonacci level from that last swing going down, we're actually at that 1.27 right here. And this is also a very key. We actually thought we were going to have an earlier bounce when it came up to the 1.27 and bounced up north, but it failed to break above that level. And then we went ahead and looked at the swing structure, and we realized, okay, we need to have a 5-wave structure right here. So which means that this last dip that we saw right here was necessary in order for this falling wedge to complete itself. And so I think that this is definitely, I know that picking bottoms and tops is frowned upon, but I'm like that trader. I get a lot of that. But I see definitely a bottom right here on the Euro Swiss. I think this way it's all the way up. And I think with all the central banks looking to raise rates over the last 6 months, I think it's coming to a point where now they holding off a little bit and they're starting to think twice about raising rates. Inflation reports starting to come down a little bit, and I think the US is also afraid of what they do into the banking sector as well. So there's a lot of concern about just raising rates, trying to combat inflation.
Yeah, no, that's definitely been a theme, and I think that we talked a little bit briefly about the dollar, and I'd love to ask you a little bit more about that, because the dollar, right, to your point that you just made there, inflation has been, in the most recent reporting even, it's been showing signs of cooling, both on the producer price index and the consumer price index. We saw those numbers fall by a greater, or not fall, but the inflation growth was much slower than expected compared to forecasts. So I think that, you have this debt ceiling concern for the dollar right now. A lot of people worried about that, the market sort of reacting to that. I've made the point, and I'll be proven right or wrong about this, of course, as always. I've been, as you know, Gary, when you're in the hot seat like this, you're right sometimes, you're wrong sometimes. I've thrown it out there that I think personally the debt ceiling situation will come and go as a fear, as they always do. They'll make it dramatic. Everybody will get all stewed up about it, and then they'll come to some sort of compromise, and the markets will forget about it. And then what? Well, then we're going to be left with the exact point that you're making, I think, where you have these cooling inflation levels, and the Fed and the ECB at Bank of England, they don't want to break anything. They don't want to destroy their economy. So there may be that room for interest rates to then calm down, or potentially, as the market seems to be forecasting, potentially even be cut by the end of this year. So I think it's a really interesting story on the dollar. So I'd love to get your take on the dollar, and then you've also got oil. So we've got 2 spots to go there.
Yeah. So dollar. So I think with everything they're doing currently right now, look, to put politics aside, everything that's been done right now in this country isn't dollar favor. In fact, it's actually cutting the dollar more, making the dollar weaker and weaker and weaker. Especially if we're hearing rumors, not rumors, but actually action being taken by the Chinese to go ahead and start producing oil, or at least pricing oil in actually yuan. And a lot of the other big oil countries are actually on board on that as well. And if that starts taking place, that puts a lot of pressure on the dollar as the reserve currency of the world. And if that takes place, if we lose that right as the world currency of the reserve currency of the world, then dollar's going to fall a lot faster, and it's going to go fast down, which creates a lot of problem for the dollar. And I think there's concern around that. And not a lot of people are talking about that, but that is actually a big concern that's currently taking place at the moment right now. So I don't have great hopes for the dollar, big rallies, at least in the long term. Short term, we might see some rallies in the dollar, but I think it's going to be short-lived as we still see the pressure on the dollar if it does lose the reserve currency of the world title. So we'll have to wait and see how that plays out. So I'm definitely not big bullish on the dollar, at least not in long term.
No, and I think sorry to cut you off. I just want to say that concept about de-dollarization is absolutely worth noting as well, because that concern around the BRICS nations and potentially that, you don't want to sound like a doomsday or a prepper or anything like that. It's just the reality of this world. If you know your history, throughout history, right? Reserve currencies are not unique to just today, right? They've happened over and over. It was the British pound at one point. It was the German mark at one point, right? If you know your history, central banks bargain for power throughout history. And the question is now a serious one about whether or not the dollar will remain sort of this standalone privileged vehicle that it is, where it has, the command to bully other countries or not. And again, it's just being aware. If you're going to be a trader, if you're going to be an investor, you have to know about the concerns and what they might do to markets. And of course, I'm pro-American as always, so I'm not saying anything bad about America. So don't shut me off, YouTube. You guys are an American company. I don't want to be shut off, but but it is a worthy concern to mention, and I think that's a good point. What were you going to say next? I
was going to say, there's two things that this country needs to start doing, and that is produce oil here in the US so we can become producers of oil rather than actually a import or an importer of oil. But become a producer of oil. One, that's definitely because that's definitely going to help our situation with regards to the reserve currency of the world. Also, another thing is we've got to stop spending. If we keep spending at the rate we're spending right now, we're actually going to cripple the dollar itself. It's like anything. Think about us as homeowners and people that earn a living to pay our debt. If we don't have money to pay our debt, what happens? We go bankrupt. That's the same thing that's going to happen to this country. This country is spending so much money that the GDP is not enough to be able to pay for the debt. And if we get into that situation, as we've just now getting into that situation where they now looking to increase the debt levels, if we can't pay our debt, if they decide that's it, that's the cutoff, and we're not making enough money to pay our debt, it's a problem. It's a huge problem for the dollar. So,
absolutely,
a lot of things to consider there. But like you said, let's not become doomers of the world right now.
How do we trade it? That's the real question. How do we trade it?
Well, that's great. So the thing here is, and I don't want to be an ostrich with my head in the sand and not focus on the bigger picture, but also realize that there are smaller structures that we can trade, and so we have to once again be very aware of what's going on in the bigger picture, but at the same time, we know that there's opportunity on the smaller time frame. So if I go to the dollar, back to the dollar right here, we've seen the dollar actually showing a little bit of upside move. It's not quite the way other currencies are moving, because some currencies are actually like the euro, US dollar. We've seen the euro, US dollar selling off, but then you've got other currencies that aren't quite seeing the same sort of thing right now. So we've seen a little rally in today's trading, but again, it's still at this resistance level right here. And so it all comes down to how it completes this. Now, I would probably say be on the sideline with the any dollar cross at the moment right now until we get a good confirmation of what's happening here at this resistance. If this resistance does break, and I think I heard you say you're not a buyer or seller on the euro US dollar, and I think it's for the same reason, because you want to see what it does at that support level. Are we going to go back up again? Because we've had many times that the market goes in, breaks through, and then closes out back below right here, or even closes up above, and then the next day, trading day, comes all the way back into that range again. So we've seen a lot of false breakouts appearing in different forms. So I would say dollar looks interesting for a breakout, but I'm not convinced about that. I'm going to hang on to a little more data before I make a decision how I'm going to play the dollar.
Yeah, I think that's fair. I think, the dollar itself, if I was to trade it, it would have to at least be something against something that I'm outright bearish on, right? If I'm going to trade a currency pair, it's got to be something for me, perhaps like the Swiss franc, perhaps like, I have my specific pairs that I would trade the dollar against if I had to. But I'm not super biased one way or the other. Like I mentioned, I think that fundamentally the upside for the dollar is limited due to that debt ceiling situation. I think that is sort of a come and go news event. And that's just my take on it. So yeah, we'll see how that plays out. I want to also ask you, Gary, while we're talking about the dollar, gold clearly getting hit pretty hard off of this dollar strength recently. Several gold and silver, the metals market getting really hit off of this. What is your take on gold? We've come into potentially a support around 1975, and we're seeing some reaction there. What's your take on the gold market right now?
As you know, I follow elite wave structure. I've actually created courses on elite wave, and I've been taking elite wave and simplifying it to make it a lot easier. I don't follow the rules that elite wave has set out, but I follow a lot of the stuff that elite wave sets out with a bit of easy sort of approach to it. And so I'm looking at gold right now in a 5-wave structure, and we see that we've hit this last structure right here that's completed my 5th wave. Normally, I like to see it trading right about the 127 as the 5th wave completes there, but it's gone a little higher, and that's fine. And so I'm saying, based on the structure, gold is expected to drop back down to this level, which normally takes out the 4th wave, and that is priced down here. Let's get a price on that. Looking at 1,807 is going to be the downside targets. So 1,807 is going to be the downside target. So I'm saying selling on sell gold down to 1,800, and then at 1,800 we may start seeing the market go back inside its rally. So it's definitely in a dip right now.
Yeah, that could be an interesting. It would definitely be an interesting sell-off. I think that recently, it's hard to deny that it has not lost some of its steam. What I'm looking at right now on my chart is just the daily view, and what you'll see on the daily view is that, you know, just from a clear, concise viewpoint of the gold price here, you can see we shot straight up for a while. We had just a straight run. We've now entered into this sideways market. I wouldn't say I'm outright bearish on it at this time, but I do see how if price was able to break this sort of sideways motion and potentially even enter into sort of a downward directional market, the downside to 1,800 seems like it actually could make a lot of sense, right? Just reversing what it did on this run to the upside. Now, of course, what this probably would imply would be more hawkish monetary policy, and I'm not really there. I can't see that. Perhaps I could be proven wrong about that. I just don't see quite how that could happen at this time. I think that, you know, regardless, I'm not necessarily buying gold. I tried context, Gary. I bought gold last week twice. One time I made money. I trailed stops on this one, and when it eroded back, I stopped out for some profit in there. And then a second time, I took a loss yesterday and stopped out when it broke this level of support, which I now have highlighted in red here around 2010. So I stopped out of that trade. And I've had a lot of questions coming in. Are you going to buy gold again? And for me, the answer is no, not right now, until I see some kind of show of strength again. You know, Gary, in terms of my active trading, you're familiar. I'm looking to trade momentum, trying to pull back buy, that sort of thing. I'm just not quite there until we see off of the lower time frames a signal of strength. If it happens, it happens. If it doesn't, you know, I'll just probably sit and wait until that strength comes back in. So I'm not necessarily bearish, but I would say neutral, because I'm not actually looking to actively buy it until it shows the setup that I'm looking for. So that's where I am at on gold. And guys, I want to take a quick second here just to pause in the show to let you guys know that if you do not already follow Gary on his own social medias, he's come on the show for a long time. He's been a big supporter of what we've done here, and we, of course, want to return that support. If you guys are looking to follow along with Gary, make sure to follow him on his own social medias. We have his links being dropped in the chat right now for you. If you click these links, it'll take you to his channel where you can subscribe and again, catch up more with Gary. Gary, what's the channel that you like best for people to find you on? I'm sorry, Gary. I just lost my sound in my head.
Oh, hang on. That's not you, buddy. Sorry, that was me. For some reason.
Oh,
Yeah.
okay. I was like, where'd you go? Okay, I can hear you.
That was me. Yeah, so Traders Network Club is probably the channel to go to. So Traders Network Club, we do a lot more broadcasting on that. I'm going to become a little more active. I've been traveling around quite a bit, so I haven't really got a nice schedule going, but we are working on that schedule. So FX Big Dog, that's right as well. So FX Big Dog channel or the Traders Network channel, both of them are pretty good. We do Friday battles. Me and my son Cameron actually do a trade battle on a Friday, where we actually challenge each other with some pairs that we look at, and we place some live trades, and we actually post those live trades in the live market as well. So we've had actually 100% success rate already. So all our trades that we've given out on a Friday have paid out in profit as well. So check it out, Traders Network Club. That's the place to go.
That's fantastic. Well, Gary, thank you for joining me on today's show. We just dropped your link again. Again, guys, make sure to go subscribe, go check out some content, and be on the lookout for his next post. So, Gary, thank you for coming on the show, and we'll see you back next time, man.
Thank you, Nick. Appreciate it, buddy.
See ya.
Bye-bye.
Cool. Yes. So, as always, I would say with this stuff, if you enjoy one of our guests, make sure to go show them some support. These people who come on our show, they come on for the best possible reason. They love trading. They love, putting out content and working with other traders. If you guys ever meet someone on our show, I want to encourage you, go say hello to them, go subscribe to them. It really, it bodes well for the A1 trading team and what we're trying to do. We're trying to bring more talent, more people onto the show all of the time. So if you enjoyed today's stream, make sure to hit that thumbs up button. Remember, last thing I'll say before you go, do not miss our chance to win free Edge Finder copies. We've got the link being dropped in the chat one last time. We're giving away free copies of the Edge Finder tomorrow. We're giving away 2 copies to 2 lucky people in the audience today. If you have not already entered, send us a direct message here with your favorite feature of the Edge Finder. Mention which feature you love most about the Edge Finder, and one of our support reps will get you added into the giveaway for a chance to win tomorrow a free copy of the Edge Finder. Thank you guys for tuning into today's live stream, and we'll see you back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, you can improve your trading performance 30 times faster with Forex Tester 5. Backtest your strategies using real historical data. From all of us at A1 Trading, have a great day, and we'll see you next time.